Hello, everyone. Welcome to another segment of intellectual brainstorming and academic excellence. Um, Welcome to another moment of financial empowerment on how to invest your money and make profit for yourself. Today, we're going to be looking at something dimensional, something different, and I can promise you at the end of the day, you are not going to regret the decision of what or watching our video. Now, we want to use this medium to say a very big thank you to those that have actually been returning to watch our videos. So, if you've not been watching our videos, I beg go watch them now. And if you never subscribe, make you subscribe now. Make you subscribe now. Now, I'm going to be talking about something different today, and what I'm going to be talking about is those things that you need to do before you can put your money or invest your money into stocks, into mutual funds, into those money markets and the rest of them. So we're going to be talking about these things that you need to do before putting your money into investment. Now let's dig into this topic now. You see, to become a millionaire seems very, very easy. You understand? In fact, I can assure you that it's very easy for you to become a millionaire into 2024. But there are some things that before you can actually invest your money and becoming a billionaire or a millionaire, there are some certain things that you need to do. So, despite the fact that the opportunities are open for you to actually invest your money because you know what to do now. You know what to do now, you understand? So, before you now do those things that you're supposed to do now, what are those things that you need to do before you do what you already know? You understand now? So, for those that have not actually invested their money, this topic is also very good for you. If you have not invested your money, and if you have actually invested your money, this topic is also very, very good for you because it's never too late. Now, one thing you need to know is that investment is a long-term process. It's a long-term process. And when you talk about investment, it goes with its own risk. It goes with its own risk. So if you are not a risk taker, if you are not a patient person, if you are someone that is not consistent with doing some certain things, then I don't think investment is for you. Because a lot of people believe that when they invest their money, within 2 months, 3 months, they will get their money back. It doesn't work that way. Investment is a lifetime process. It takes 10, 20, and sometimes 30 years. It's even a long-term investment that you can do and leave something for your upcoming children or your children and your grandchildren that are yet unborn. Now, I'll be looking at savings. I'll be looking at factors like paying up high interest rates. I'll be looking at how to prepare for your investment, and I'll be looking at how to build a strategy for investment, and I'll be looking at how to execute your investment, or what should you do to execute your investment. Now let's dive into the first one, which is what I call savings. Now, it is very important that when you're investing your money, you need to prepare for savings, or before you invest that money, you need to go into what I call savings. And if you've been following my lectures, I've always emphasized savings at any time because savings emergencies will always come. But when you save your money, you can actually solve those emergencies. You can actually solve those emergencies. And when you're talking about savings or investment, or before you invest, I categorize them into three parts. I mentioned savings, I mentioned investment, and I mentioned what I call spending. Now, when you talk about savings is actually for emergency because anything can happen. But imagine if I've actually put all your eggs in one basket by putting all your money into that investment. That means that you have to go back to investment and withdraw those money back, which is not an ideal thing because it will affect your investment plan. So before you put all that money into investment, please, I beg, set some money aside for what? For savings, for emergency. And that is why it is very important that you divide your income into three parts every month. You divide it into savings, into spending, and into investment. The one for investment is the one you will not touch. Then the one for spending is the one you use on daily basis. Then the one for savings is the one used for emergency and other things that may come up, at any point in time. Because when it comes to life, anything can always happen. But when you keep your savings at one side, you are well covered. Then the second one is what I call, paying up your high interest rates. A lot of us have actually gone to banks, mortgage financial institutions to actually, ask for a loan, to actually ask for a credit card. You've actually bought what I call easy buy, like buy now, pay later. You understand now? So it is very imperative that you need to escape their dagger. What do I mean by that? Dagger. When you don't pay up in time, it goes with penalties. You understand now? And most of them don't joke with their penalties. So when you don't fulfill or you default your loan or your mortgage or your credit card finance or your easy pay and easy buy, or you have to pay them every month and you default, they will give you penalty. And that penalty sometimes is always on the high side, most especially if it takes a very long time for you to pay up that money. So it is very, very important. So to avoid financial complications where it will be very difficult to measure up at the end of the day, it is very important for you to pay up all your interest. If you have actually owned a loan, or you have actually taken up a loan, then you must pay that loan to the respective organization or financial institutions to avoid their dagger or their high interest rates or penalties that goes with failing to pay up or defaulting to pay up their money. Then you need to do what I call, you need to prepare for your investment. You need to prepare. And what are we talking about preparing? This one is very important. Over the time, stocks market, the stock world or stock market has always experienced ups and downs. You cannot say that stock market has always be stable. I could remember in 2000 to 2001, there was a global financial meltdown. Then in the year 2008, there was also a global financial meltdown. Then in the year 2020, there was also a global financial meltdown. So there will always be global financial meltdown. And sometimes stocks will also we always bounce back. You understand now? So there's always this up and down. And when is the right time for you to buy stock or to invest your money? You see, the right time for you to buy stock is when the value of the stock has actually gone down. Then the best time to sell is when the value of the stock has actually gone up. I'm talking about people that are engaged or involved in what I call active investment. But if a passive investment individual, which is what we're going to talk about when it comes to number 4, which is a strategy for building wealth, you don't need that kind of analysis. Now, so number one factor which you have to consider when you are preparing to invest your money is that you need to prepare your mindset. You need to prepare your mindset. You need to prepare your mindset. You need to know that investment is a long-term process. It's not something of 2 months, 3 months, or 4 months, of 1 year. It's something of 5 years, 10 years, 15 years, 20 years, 25 years, 30 years. You understand now? And we're talking about a situation where you have a stable financial future. So it's a long-term process. Then you must be willing to lose, which is the next factor. You must be willing to lose. Sometimes, business will not go well, when it comes to stock. Most of the time, people that are involved in active stocks. If you're involved in active stocks, sometimes you may lose. So then the next one is that you need to anticipate what we call a risk. Anything can happen at any time. Just like when I said in the year 2000, 2001, there was a global financial meltdown. In 2008, there was a global financial meltdown. In 2022, because of the coronavirus pandemic and the rest of them, there was also a global financial meltdown. But now the economy is recovering. The stock market is also recovering. You understand now? But if you are going to buy a stock, you understand now, I will advise, if you are not very conversant with the issue of stock or you don't have an idea about it, then it is better for you to go and do what I call passive investment, not active investment. So these factors are very, very important, which is what I call how to prepare to invest. So you need to have a proper mindset. You need to know that investment is a long-term process. Then you need to know that sometimes you can lose, and you need to be willing to take risk. Sometimes you may lose and sometimes you might also gain. Then now let us talk about the fourth one, which is the strategy. How building the strategy for investment. Building the strategy for investment. You see, building the strategy for investment is divided into two parts. We have what we call passive and active strategy. Now, what is a passive strategy? What is an active strategy? Now, let me quickly talk about these two of them. Now, when you are talking about active, if you are talking about passive strategy, you are talking about somebody or an individual that is actually, involved in an investment that is automatic. Let me use that word, automatic. What do I mean automatic? That is, if you invest your money in passive investment, that means that every month you are going to be getting some percentage at the end of the day, or on daily basis, at the end of the month, at the end of the week, or per every 3 months, or 6 months, or 9 months, or every year. You understand now? That means that what you are involved in what I call a passive strategy. Passive strategy is what I'm doing because I don't have the passion, or I don't have that strength to absorb shock, because I don't know much about financial stock market. So I have to go for what I call the passive strategy. You understand now? And when you talk about passive strategy, you have what we call ETF, you have index funds, you have what we call mutual funds. The one I'm doing is the money market funds. You understand now? I'm looking at how to invest into what I call euro bonds and what I call ALA, or maybe fixed bond or fixed income bond or whatsoever. You understand now? So the passive income is for those that don't have the leverage, or that don't have the strength to take risk. You understand now? So, and when we talk about the passive strategy, we have you can involve yourself into investing in group of stocks. You understand that? If you are not a risk taker, or you are very scared of losing your money, so you can involve in what I call the group of stocks. Like you can involve yourself in buying stocks like Dow Jones. Of course, you must have heard about Dow Jones. If you have been watching CNN very well, or you've been seeing or hearing about Dow Jones, you can also involve yourself in Nasdaq. Dow Jones is made up of 30 companies in US. Then what about Nasdaq? Is made up of 100 companies in US. Then you also have what we call 500 S&P. It's made up of what? Of 500 companies in the US. Then now let me talk about the active strategy. The active strategy is actually for those that have financial education and they have the time to actually know what the stock market is talking about. They are the risk taker actually, because this group of people, they actually have an idea of what the stock market is all about. So if you don't have the time, or if you don't have the financial education, then that area of the active strategy is not for you, because you need to learn what we call cash flow. You need to learn what we call income flow. You need to learn what we call financial statement. You need to learn what we call balance sheet. You need to learn what we call the management of the company. Who are the people handling the company? You need to learn about the strategy of the company. You need to learn about whether the company is actually making money or not before you invest the money into such company. Because at the end of the day, if you involve your money in a company that is going to be bankrupt, for example, then you just bought just one stock, and you are not doing a conglomeration of stocks, then you might lose your money at the end of the day. So if you are not financially educated, or you don't have financial background in the area of active strategy, that place is not for you. But if you are the kind of person that cannot absorb shock, and I think that passive strategy is actually the one for you. You understand that? Because it's a conglomeration of companies like Dow Jones, like Nasdaq, or S&P 500, that we're talking about. Now let us now quickly look at the last one, which is the execution. Now, when you talk about the execution or the execute, that is, what is your game plan? If you are investing in stock, it's very important for you to stay calm, because of the ups and downs that is involved in the stock market. You need to stay calm. Like I said earlier, the best time for you to buy stock is when the price of the stock have actually gone down. Then the best time to sell is when the price have actually gone up. So don't join or follow the majority. You understand now? So you need to be very conversant with the stock market before you can actually invest your money in that area. So you need to stay calm. Then you need to do what I call calculated decisions. Calculated decision. You need to have an idea about calculated decisions, which is why if you're involved in what we call an active strategy, then sometimes you need to know that you can lose sometimes. Then for you to be an investor, you need to consistently invest. It is something you have to do every time. every month, or every week, or every 3 months. You understand? Like my own, what I'm doing is that every month I put some money into what? Into stock. You understand now? Into money market, investment, into mutual funds, and at the end of the day, it's actually playing up because every day you get some money into your account, being paid into your account, whether small what or big. But by the time you calculate those monies at the end of the day and sum them up, in a year, you can bet that you are getting something for yourself. Then you need more money to be able to invest in stocks. You need more money to be able to invest in stock. Without money, money is about Benjamins. You need to have that money for you to be able to consistently invest your money in stock market. Then the investment talk about what we call long-term investment. Those that involve themselves in buying of stocks are people that can invest for a long period of time. So if you are looking for a shortcut, investment is not for you. It's for those people that are patient, that are consistent, that are zealous, that are focused, people that know what they are doing. You understand now? People that can be patient for a very long period of time, that by the time those things, they begin to yield fruit. You understand now? Those are the kind of people that can actually involve themselves in stocks. Then you need to avoid what I call emotional decisions. Emotional decisions. You need to avoid those things. Then you need to make financial decisions as well. So these are the things that you need to do before you actually put your money into stocks or index funds or money market or ALA funds or Euro bond funds or fixed income funds or whatever you want to involve your money into. So I've mentioned 5 of them. Savings, high interest rate, you need to pay up for your high interest rate. Then you need to prepare to invest. Then you need to have what we call a business strategy, and you need to execute. On this note, I'm going to end my topic on what you need to do before putting your money into the stocks or index funds or the mutual funds. I believe this topic has been very beneficial. It has been uplifting, and you have actually gained a lot of things today. If you gain something now, subscribe to my channel now. Don't forget to share my video, leave your comment on how to serve you better. To meet next time, I remain David Oni, and my YouTube channel is actually what David Oni Books. Thank you so much for our returning subscribers. We say a very big thank you. If you have not subscribed, make you subscribe now. Thank you so much, and God bless you. This year, in our year, irrespective of the economic ulubalos and pandemoniums and economic uncertainty, I would have loved to do a video on that, but I don't want a situation whereby I'll create a problem for myself. They go look for me up and down. Because that video, I would have loved to do it. But for now, I'm still looking at what I can do to do that video that will not create some complications or some problems at the end of the day. Thank you so much, and God bless you all. Bye-bye.